Module 7, Exit Strategies, Returns Optimization, and Post-Investment Evaluation. First, understanding exit strategies. Exit strategies define how investors or owners will realize returns on their investment. Common exit pathways include initial public offering, IPO, listing the company on a stock exchange to raise additional capital and provide liquidity to investors. Merger and acquisition, M&A, selling the company or merging with another entity to realize value for shareholders. Buybacks, company repurchases shares from investors to consolidate ownership and manage control. Secondary sales, investors sell their equity to other private investors or venture capital firms. Liquidation, selling assets in cases of underperformance or strategic closure. You will understand that the choice of exit strategy depends on business stage, investor type, market conditions, and long-term objectives. Second, planning for returns. Optimization. Returns optimization ensures that both investors and founders achieve maximum value. Financial engineering, structuring equity, debt, and hybrid instruments to enhance returns while managing risk. Operational efficiency, maximizing revenue, controlling costs, and streamlining processes to improve profitability. Growth acceleration, investing strategically in market expansion, product development, and innovation to increase enterprise value. Timing considerations, choosing optimal exit timing based on market trends, valuation peaks, and business readiness. This section emphasizes strategic foresight and disciplined execution to maximize capital efficiency and investor satisfaction. Third, post-investment performance. Evaluation. Post-investment evaluation involves assessing the effectiveness of capital deployment and investment decisions. Financial performance metrics, ROI, return on investment, IRR, internal rate of return, net profit margins, and cash flow analysis. Operational metrics, productivity, project completion rates, and resource utilization effectiveness. Strategic outcomes, market share growth, innovation impact, and brand enhancement. Investor-focused metrics, achievement of milestones, adherence to agreements, and fulfillment of expected returns. Module 7 emphasizes continuous monitoring and evaluation to inform strategic decisions and guide future fundraising. 4. Risk management and exit planning. Exit strategies involve specific risks that must be assessed and mitigated. Market risk, volatility affecting IPO valuation, acquisition attractiveness, or secondary sale pricing. Operational risk, inability to sustain performance leading up to exit. Regulatory risk, legal compliance for IPOs, mergers, or equity transfers. Reputational risk, investor or market perception impacting future opportunities. You will gain insights into developing risk mitigation frameworks, including scenario analysis, contingency planning, and legal safeguards. 5. Governance and investor alignment. Ensuring alignment between investors and founders is critical in post-investment phases. Transparent reporting, maintaining open communication regarding financial performance, strategic shifts, and operational updates. Board engagement, leveraging advisory boards to guide exit planning and capital deployment decisions. Conflict resolution, proactively addressing disputes or differing expectations to preserve relationships. Future funding prospects, ensuring that exit strategies enhance credibility for subsequent fundraising rounds. This section highlights that governance, transparency, and strategic alignment are fundamental to successful exits and returns optimization. 6th, lessons learned and continuous improvement. Post-investment evaluation provides critical lessons for future fundraising, capital deployment, and business strategy, identifying successful strategies and areas for improvement, refining operational processes and governance frameworks, adjusting fundraising and investor engagement tactics, leveraging insights for growth acceleration and value creation. You will understand that each funding cycle is an opportunity to build knowledge, improve strategy, and strengthen investor trust. Learning outcomes of Module 7. By the end of Module 7, you will be able to identify and select appropriate exit strategies based on business stage, investor type, and market conditions. Implement strategies to optimize returns for both investors and founders. Conduct comprehensive post-investment performance evaluations using financial, operational, and strategic metrics. Assess and mitigate risks associated with exit planning and returns optimization. Maintain governance structures and investor alignment to support sustainable growth and future fundraising.